Open today's second hearing of the House of Representatives Standing Committee on Economics for the review of the 4 major banks and other financial institutions. This hearing is focused on the insurance sector. Given the widespread misconduct across the financial services sector identified by the Hayne Royal Commission, it is important that financial institutions are held publicly accountable to ensure that they make the crucial improvements needed to restore trust in our financial institutions. These hearings provide an important mechanism to examine the insurance sector's progress in implementing relevant Hayne Royal Commission recommendations. Insurance is an essential way that Australians and Australian businesses manage and protect themselves from financial loss after disaster strikes. Australians must be able to rely on the insurance sector to provide high-quality policies and respond quickly when claims are made. The General Insurance Code Governance Committee's recent findings regarding the substantial increase in code breaches is concerning. It is important that insurers have strong code compliance and governance frameworks in place to ensure that consumers are receiving the protections afforded to them by the code. The recent catastrophic bushfires and the COVID-19 pandemic have also raised a number of relevant issues relating to policy coverage ranging from general insurance, travel insurance, landlord insurance and income protection insurance that also need to be explored. Today, the committee will hear from the General Insurance Code Governance Committee of the Insurance Council of Australia, Genworth and Covermore. I would like to outline a number of matters related to the conduct of today's hearings. The hearing is being held via teleconference with members and witnesses appearing together online from across Australia. And we have at least the Deputy Chair and Dr Ali and Ms Archer doing so. And I think Dr Molino is still on the phone. With members and witnesses appearing together... There you go. The hearing is being webcast and can be viewed by members of the public from the Parliament's website, aph.gov.au. Witnesses will be invited to make a brief opening statement and will then be asked questions by the committee, first by myself and then the Deputy Chair. I will then alternate calling on a government member and then a non-government member until the committee has concluded its questioning. It is essential that all members and witnesses respect and adhere to the requirement to mute their microphone unless given the call to ensure the questions and responses are heard in silence. Members and witnesses have been given advice regarding connecting to the video conference. If during the hearing you are disconnected, please follow the provided instructions to rejoin the video conference or call the number provided to be connected via teleconference. I refer members and witnesses to the House resolution related to procedures for dealing with witnesses at page 127, paragraph 9 of the House of Representatives Standing Orders. The resolution provides that should a witness refuse to answer a question, they should be asked to state the grounds on which they object. The committee may either accept that objection or alternatively deliberate at a future private meeting on whether or not to insist upon an answer. If the committee does consider the matter in private, it may write to the witness with the outcome of its discussion. During the course of the hearings, witnesses may be asked to provide documents at a later stage. If a witness subsequently refuses to provide documents, the committee may meet in private to consider the matter. Under Standing Order 236 of the House of Representatives, the committee has the power to compel witnesses to produce documents where the committee has made a decision that the circumstances warrant such an order. Rightio. General Insurance Code Governance Committee. We have a representative from the General Insurance Code Governance Committee appearing for today's hearing. For the benefit of Hansard, would you please state your full name and the capacity in which you appear before the committee?
Sally Davis, General Manager of the General Insurance Code Governance Committee.
I remind you that although the committee does not require you to give evidence under oath, the hearings are legal proceedings of the Parliament and warrant the same respect as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as contempt of Parliament. I also remind all members and witnesses that they must set their microphone to mute unless given the call to speak. I now invite you to make an opening statement.
Thank you, Chair, for the opportunity to give evidence and provide this opening statement on behalf of the General Insurance Code Governance Committee that I will refer to as the CGC. As I'm appearing on behalf of the CGC rather than as a member of it, this prepared statement is approved by the CGC to represent and convey their views for the purposes of this appearance, and as such, it's a little longer than 5 minutes. The CGC is an independent body responsible for monitoring and enforcing code subscribers' compliance with the standards in the General Insurance Code of Practice. The CGC's purpose is to drive better code compliance, helping the general insurance industry improve its service to consumers through stewardship of the code. The CGC is made up of 3 members, an independent chair, Ms Linnell Briggs, AO, a consumer member, Ms Philippa Eyre, and an industry member, Ms Cheryl Chantry. Ms Lynelle Briggs AO is also the current Royal Commissioner into Aged Care, Quality and Safety. Accordingly, Ms Briggs is unable to appear at a public hearing to represent the CGC at this time and requested that I appear on behalf of the CGC in my capacity as the General Manager of its Secretariat function. I do so in my role as General Manager of the Code Compliance and Monitoring Team at the Australian Financial Complaints Authority. Among other things, the team acts as the secretariat that supports the CGC and administers specified compliance functions on behalf of the CGC pursuant to an outsourcing agreement between the CGC Association and AFCA. I have authority today to speak to the CGC's published work, but do not have authority to speak to the views of the CGC. Questions of that nature can of course be taken on notice and will be provided in writing by the CGC to this committee for the record. The General Insurance Code of Practice was introduced in 1994 by the Insurance Council of Australia and is regularly reviewed and updated by that industry body. The most recent update was released on 1 January 2020. The Insurance Council of Australia has recently announced that code subscribers will implement the provisions of the new code that address support for customers experiencing vulnerability and financial hardship, as well as publishing their family violence policy on their websites by 1 July 2020. The remainder of the new code will be implemented by 1 July 2021. With 160 subscribers, the General Insurance Code of Practice covers 97% of Australia's general insurance industry. As the independent monitoring body, the CGC's functions, responsibilities and processes are set out in its charter. In addition, the Charter sets out the CGC's commitment to code subscribers in regard to the release or publication of a subscriber's individual confidential information, and therefore all CGC published information about subscribers is presented in an aggregated and de-identified format. The CGC monitors how well insurers are complying with their obligations under the code through self-reporting of breaches and significant breaches. It investigates code breach allegations from consumers and consumer advocates and conducts detailed monitoring activities to investigate compliance in specific areas of emerging risk. The CGC publishes and shares information about its work and also has the power to impose sanctions on insurers that fail to fix a code breach. The CGC further aims to drive improvement with individual insurers and industry-wide by working with insurers to help them remedy code breaches, publishing reports and guidance notes, and by advising the Insurance Council of Australia on improvements to the code. Further resources and publications regarding the CGC's work are available on its website. Among these publications is the CGC's latest annual report, General Insurance in Australia 2018-19 and Current Insights, released in April of this year. The report covers the 2018-19 financial year and the early part of 1920 and examines how subscribers sold insurance, handled claims, worked with people in financial hardship and managed complaints and disputes. It also looks at the changes that will result from the release of the 2020 Code of Practice and how they will impact subscribers, consumers and small businesses. The report contains 17 recommendations for subscribers to adopt to improve their compliance with the code, focusing on areas where industry can do better, lifting service standards and improving customer outcomes. The annual report notes the spike in the number of breaches and significant breaches recorded in the reporting year, continuing an upward trend that has been occurring since 2014-15. The two code sections most consistently breached were those relating to the handling of claims and complaints. Significant breaches increased to 4 times their 17-18 level. Such a substantial increase is concerning as it means that consumers and small businesses are not receiving the protection afforded to them by the code and that subscribers' breach prevention processes are inadequate. At the same time, the CGC acknowledges that more breach reporting can be viewed as evidence that subscribers are taking their auditing and monitoring functions more seriously and their breach detection mechanisms are more robust and effective. The report notes that both the Royal Commission and the CGC's increased focus on subscribers' code compliance and governance frameworks during the year appear to have encouraged subscribers to look more closely at their compliance obligations. Following on from its annual report, earlier this week the CGC released another report entitled Living the Code, Embedding Code Obligations in Compliance Frameworks. This report resulted from an own motion inquiry the CGC conducted into the adequacy of subscribers' compliance frameworks and commitment to applying code standards honestly and fairly. The primary purpose of this report is to remind insurers that as code subscribers, they must adhere to the code and implement robust compliance measures that embed a culture of fairness and honesty, with the focus on prioritising the needs of consumers and small businesses. The CGC also encourages insurers to prioritise vulnerable consumers, including those experiencing financial hardship. The report provides a series of simple and practical recommendations about culture, leadership and governance that insurers can use to improve their code compliance and insurance service. Complying with the code is not just about meeting minimum standards. The Living the Code report asks subscribers to place the code and its purpose of doing the right thing by consumers at the heart of their strategic and business decision making. The CGC wants the boards and executive management of subscribers to live the code and set the tone for all employees by role modelling that behaviour throughout their organisations. The report echoes the code and the CGC's advice to insurers. Do the right thing, put your customers first, and embrace the opportunity to embed a strong culture of fairness, honesty and transparency. With the 2019-20 financial year drawing to a close, the CGC has a number of key items in its work plan for 2021, in addition to its standard functional operations, such as transitioning to the new 2020 code, an inquiry into travel insurance, an inquiry into the reasons for withdrawn claims, enhancement of industry data collection and reporting. Since late last year, the CGC has seen a number of catastrophes impact communities throughout Australia, including the devastating bushfires and more recently, the COVID-19 pandemic. During this period, the CGC has engaged closely with insurers, reminding them of the code's requirements to be open, fair and honest in all dealings with consumers and small business. That commitment has never been more important. Consumers and small business need the protections provided by the code, especially during this time of extreme crisis. That concludes my opening statement. Thank you again, Chair and members of the committee. I'm now happy to take any questions the committee may have.
Thank you, Ms Davis. We'll go to the Deputy Chair, seems to have disappeared again, but I'll kick off. In fact, the primary basis in which we raised or asked for you to come and appear before us was because of the recent reports from the number of complaints that have been made. 31,186 breaches of the code. Can you give us a 230% increase, if I'm not mistaken? Is that correct?
Yes, that's correct.
So that is an extraordinary number by any measure or any metric in which you normally assess.
Oh, sorry, just to clarify. So it's 128% increase on last year, right, of the number of breaches.
Yeah, and 230%. Sorry,
300% increase in individual significant breaches.
Right. So that's an extraordinary number I think you would accept under any circumstances. Yes?
Yes.
Great.
Yes.
So why?
Well, I'd say the primary reason that the committee would say that that has occurred and is included in the chair's message with the annual report is that as a result of the work that's been taking place since the Royal Commission, the industry has improved its processes for identifying breaches and has functioned probably in the way that it should have functioned prior to the Royal Commission in terms of the fact that it has increased its self-reporting, which is the basic premise of a self-regulatory code.
So there was previous underreporting is what the real suggestion is. Is that correct?
Likely, yes, that's the committee's impression.
Right, and has there been any effort that's been undertaken to then establish what happened previously to justify such a huge leap?
Well, I think a lot of that is contained in the Living the Code report that was released, which was a 2-year process for exploring all the various areas of culture and leadership within general insurance organisations that subscribe to the code, and the measures that they take to identify breaches and then self-report them. So really that whole report speaks to some of the factors that underlie the self-reporting.
So the fundamental issue then is not just there was reporting in the failure to report in the past, but they simply didn't even have the systems in which to identify things that needed to be, complaints that needed to be reported, correct?
There has been improvements in those systems over the past 18 months that I think are reflected in the increase in breach reporting.
But I get that, but I mean, I find it extraordinary that companies could have such a failure of reporting over such a long period of time that once they actually went through and reviewed it, they identified all of these mechanisms and all of these systems problems that led to massive jumps in the vicinity of in excess of 100%, in some cases 200% of self-identification. So how is it that a process within a system of a company can be so off-beam or so wrong that it could lead to this situation? And frankly, for confidence, how can we be sure now that they're fine and that we're not going to see an equivalent problem?
Well, I don't know if we can ever be sure, but the work of the committee is certainly to bring this to the attention of the industry so that there can be ongoing continual improvement to ensure that those systems are in place in the future.
So why then did it take a Royal Commission to get there?
Well, I'm not sure I can really answer that on behalf of the committee. They haven't expressed a view as to why it took a Royal Commission to
I'm asking for your
view.
I mean, it just seems to me that these are not, it's not like, there was these problems and then we just, there would just have to be a couple of complaints that accidentally fell down the back of the desk. This is a systemic problem, clearly. And so we now need confidence that this systemic problem has been addressed and that there aren't just a few more sitting around and that there aren't further measures. So what was it in your mind that happened in the Royal Commission that prompted it beyond the investment by the companies to say, clearly we need to take complaints seriously?
Well, this committee has been in existence since 2014, the General Insurance Code Governance Committee, and they've been collecting data since the end of the 2014-15 year. So when we did the work that was required for the chair of this committee to present a witness statement to the Royal Commission, it became clear that we had enough data to present a trend or change in breach reporting over time, and also recognising at that point in time, which was 2018 of course, so we had about 3 years of data to rely on, that there was clearly underreporting. So for the work of the committee, I think that that was a moment in time at which the Royal Commission highlighted to them that since they'd started their work and over the 2 or 3 year period, it was clear that there were likely deficiencies.
Okay, and so do you now feel we can be confident as a committee that such improvements are there, that that complaints be properly identified, addressed, and resolved?
Yes, I think there are certainly pockets, perhaps across the 160 code subscribers who are still need to do a fair bit of work, but there are some very major subscribers who are doing a lot of work to ensure that their self-reporting is accurate. Okay, so according to the media report, of the 31,186 breaches of the code, they all... I think it's Dr. Molino. He was the only consistent trend between the two. Or maybe it's Ms. Archer. No, she's on video. We'll just turn the volume down on Dr. Molino. Deputy Chair, control your members. Of the 31,186 breaches of the code, according to the media reports, they all basically boil down to 5 companies. Is that correct? Yes. Okay, who are those 5 companies? 84% of them. 84%. So who are the 4 companies? 5 companies, sorry. So, as I said in my opening statement, the committee has confidentiality obligations in its charter. So in the hearing today, I'm not able to identify any specific code subscribers. So I'd have to take that question on notice. Okay, that'd be good, because what would be very interesting is of the 31,186 breaches of the code, if 84% of them are on 5 companies, whether it's specific to the company, to the sector, whether any of it's a consequence of a particular events, or whether there therefore needs to be some sort of adjustment around policies and structures to reflect that, or whether it's because there were just 5 companies that had really lousy processes that have suddenly come up to speed. I'll hand over to you, Deputy Chair.
Thanks very much, Chair. Ms Davis, thanks very much for your evidence. I suppose an opening question that you always have over something like this is whether the problem has always been this bad and it's just the reporting that's caught up to it. That is, we're seeing a little bit more of the iceberg, or whether the problem's actually gotten worse. Do you have a view on that?
I think that definitely being able to identify the breaches and have them self-reported in a more accurate manner enables the committee to be able to conduct some root cause analysis and really understand what the trends and issues are in the industry to be able to affect continuous improvement. So whether it has always been that bad, as you say, is a little difficult to answer, because I suppose we didn't know what the information would have looked like before. But we're certainly getting a clearer picture as the self-reporting accuracy improves. And the committee expects it to continue to improve, particularly off the back of these 2 reports.
And so are you expecting that the number of breaches will stay at about this level? Are you expecting an increase in future years if you're uncovering more of the problem?
The committee has a view that it's likely that they don't have a view that they will decrease, so they think it'll either stay constant or potentially even continue to increase, particularly as a couple of these reports, and in particular the own motion inquiry report that was released on Monday, has some clear recommendations for subscribers as to how they can improve their frameworks. And so off the back of that, they expect them to implement those recommendations, and therefore there is every chance that there'll be an increase in breaches self-reported to the committee.
So you have a number of extraordinary statements in the report. As the chair said, it's pretty shocking findings. One of them is that subscriber P accounted for 51% of the whole industry codes breaches for 2018-19. Was subscriber P just as prominent in breach reporting in previous years?
In the last probably 1 to 2 years, not as prominent. There's certainly been a large increase, a threefold increase on their breaches, and probably significant breaches year on year from 17-18, but still consistently increasing.
Was there any other year in which subscriber P accounted for a majority of the whole industry breaches?
17-18 as well.
So this mysterious subscriber P seems to be the heart of our problem to some extent. Do you see any systematic issues that the sector can learn from in that? Is this just a case of bad apples? Is it the case that subscriber P just has more customers and therefore its breach rate per customer is not as bad as it looks?
No, actually, I think it'd be fair to say, and I think the committee would be keen to categorise subscribers like subscriber P and probably subscribers W and I1 as being subscribers who have actually improved their reporting processes to the extent that they are now likely accurately providing it with information rather than categorising them as being poor performance.
I'm not sure how many plaudits we should give them for telling the truth. I mean, the fact is that we're talking about breaches that affect a huge number of people. You've got 119 breaches affecting 380,000 consumers. So roughly every time we have a significant breach, that's hitting 3,000 consumers. That seems to point to some pretty systematic problems within insurers, doesn't it? And doesn't it suggest more broadly that you need a stronger sanctions powers, as the Hous Commission report recommended?
Yes, I mean, the committee was certainly very pleased with Commissioner Hous' recommendation around sanctioning powers, and so it now will have more robust powers in the new 2020 code.
Do you think those powers will be sufficient to get the breach rate down? Standard economics of crime, we should expect that if the penalty goes up, then the offences go down. Are we going to see that this time around?
I think quite possibly, yes.
Do you think you've got strong enough sanctions powers?
Yes, I think the committee can work within the sanctions powers that it's now been afforded, primarily because at least there is now a discretion to apply a sanction. In the current regime, the subscriber essentially had to not have remedied the breach for them to be able to apply a sanction, and that aspect has been removed.
When do you think we'll see the first sanctions being applied?
Well, the code itself, now the General Insurance Council of Australia has delayed full transition to that code. So that code now won't be implemented fully until 1 July of next year, although there are some aspects of it that will be operational from 1 January. So it definitely won't be until after 1 Jan at the very earliest.
So consumers can expect more poor behaviour of the kind that's being uncovered here until at least next year. That seems disappointing.
I would hope that the industry wouldn't be waiting for the sanction power to come into effect.
Your Living the Code culture section has some interesting recommendations there. Put the consumer at the centre of your thinking. Make sure the measurement and reward systems don't focus solely on short-term profit. Align your remuneration with customer-centric cultural values. This seems like a statement of the bleeding obvious. Shouldn't we be concerned that you need to actually say to insurers that they need to be customer focused?
I think a lot of this work and a lot of these statements were made as a result of the information that we received from the 45 subscribers that were that had questions asked of them as a result of this report. And it's also a continuation and a reinforcement of what the purpose is of the code, and also some of the comments that were made by Commissioner Haynes. So yes, it may be obvious, but the committee felt that it was appropriate to make those recommendations very clearly and simply.
To what extent do you think customers are getting appropriate and timely compensation when that's warranted?
Well, the monitoring that we conduct on behalf of the committee would generally see remediation processes very specifically when there's a report of a significant breach. And the chair of the Code Governance Committee is extremely keen to reinforce to subscribers that they attempt to conduct all remediation and rectification within a 6-month period. That probably doesn't always occur, but that's generally the process that we are keen to see happen. Often also, some of the matters that are reported as self-reported breaches.
The 6-month period, when's that from? Is that from when the customer was wronged, or is that from when you first hear of it?
No, that would be from when the subscriber self-reports a significant breach. They're required under the terms of the code to self-report a significant breach within 10 days of them becoming aware of the breach occurring.
So it could be considerably longer than 6 months between when the customer is wronged and when they actually get compensation.
What I was going to say before and to clarify is that sometimes some of the significant breaches, quite a number of them have already been, or at the same time as they're reported to the Code Governance Committee, they're also reported to ASIC. As the relevant regulatory body, and so often those remediation plans have already been approved or discussed with ASIC, so we wouldn't directly be involved in that process.
Deputy Chair, you have one final question.
Thanks very much, Chair. Ms Davis, 49 out of the 119 recommendations go to conducting sales in a fair, honest and transparent manner. That sales process clearly seems to be an issue. Can you give us a sense of some of the specific problems that you've seen arising in sales?
Yep. So the issues around sales and being conducted in a fair, honest and transparent manner, some of the issues are around customer refunds. So refunds are due within 15 days when a policy is cancelled. That's the actually the 7th most breached subsection of the code. And correcting errors in a customer's insurance application, declining a consumer's application for insurance, requests for information from an insurance applicant. Those would be a flavour of maybe some of the issues that we'd see.
Thank you. Thanks, Chair.
Thank you. Ms Archer. I'm not getting anything. Dr Ali.
Thank you, Chair. I have a few questions regarding, Ms Davis, if I may, around the sanctions. I note that with the new code of practice, but in the previous code of practice, the sanctions were only imposed where an insurer had failed to correct a code breach, rather than imposing sanctions in breach of the code in and of itself. Can you talk me through what kinds of sanctions are available to you? Are they tiered? And how many times have they been used in the last year? And how often are your sanctions reviewed?
So the sanctions in the 2014 code, which is the current code that the committee operates under, essentially include requiring the subscriber to undertake a rectification process or a particular step within a specified time frame, undertake a compliance audit, undertake corrective advertising, and publicly naming a code subscriber as non-compliant. There are now additional sanctions in the 2020 code, which will become operational in about 12 months' time, which are specifically go to compensation of an individual, publication that a subscriber has committed a significant breach, and the paying of a community benefit payment for a significant breach. So that's an outline of some of the sanction options that are available to the committee. As I said before, or perhaps it wasn't clear, the committee has actually never been able to exercise its sanctioning power, because even though those sanctions are available, it only has a right to impose a sanction on a code subscriber if they fail to implement a corrective measure within the timeframe agreed with the committee, or where the committee fails to be able to reach an agreement with the code subscriber about the corrective action, and that's never occurred.
Correct me if I'm wrong, but it seems to me that a lot of the sanctions that you mentioned that come under not the new code, but the current code are corrective measures themselves. So
Correct.
what I'm hearing is that the sanctions are corrective measures that can only be put in place if corrective measures aren't already taken up.
Well, that's right. So in all cases where breaches are reported, and in particular significant breaches, those corrective measures are generally or are always implemented. Otherwise, the committee would have the ability to sanction, which would be to require that corrective measure to be implemented.
So, but in terms of them actually being sanctions, like when I think of sanctions, a sanction would be a form of punitive measure. So, for example, deregistering them or something like that. They really aren't what I think the average person would consider to be sanctions. They are more requirements for corrective measures that if they aren't met, then more corrective measures are put in place. But there's actually no consequences, if I might say, to any organisation that's actually breached the code. Would that be a correct assumption on my part?
Well, the sanctions are written into the code by the Insurance Council of Australia. The industry itself owns the code, so they write the code.
Okay. So the Insurance Council has can alter the code at any time, right? And it can include new sanctions at any time, but it hasn't done. It's only now in response to the recommendations of the Hayne Royal Commission. What could you say had prevented, if this is not something that's new, it's been going since 2014, you've had breaches before, it appears to me that you recognise that the sanctions were limited to only corrective measures that could only be enforced if the corrective measures weren't already taken. What has prevented the council from correcting this anomaly in the first place?
Well, the Insurance Council's been conducting a review of the 2014 code for a couple of years now, so the additional sanctions are the outcome of that review. So, I mean, nothing has prevented them, I would say, but they have now implemented improved sanctioning powers.
Just two more questions, if I may, Chair. Just quick ones. Subscription to the code is not compulsory.
If you're a member of the Insurance Council of Australia, it is.
Okay, and you have the code covers 97% of the general insurance industries. Is that correct?
As I understand it. As I understand it, yes.
And the other 3%, are they just who are non-subscribers? Who regulates or oversees them?
Well, they're not subscribers to this self-reporting industry code. I mean, they would have the responsibilities of regulation and be, they'd have financial services licenses, I assume, and they'd have to report to ASIC.
And you mentioned something around the new code having a family violence policy. Could you please talk a little bit about that?
Yes, there's a requirement in the new code that all insurers that subscribe to that code by 1 July 2020 have to have a family violence policy available to their customers.
Is that a prescriptive policy, or who's going to regulate that policy and the implementation of the policy?
Well, the committee ultimately will be overseeing whether that policy is in place and whether it's adequate, yes.
There was something that I wanted to ask, but I've forgotten now, so it mustn't have been that important. That's all from me. Thank you, Chair, and thank you, Ms Davis.
Okay, thank you, Dr. Ali. I know Ms. Archer doesn't have any questions. Dr. Molino. 5, 4, 3, 2, 1.
Hi.
Hey.
Hi, sorry. I just unmuted. And I just want to put on the record that I did not put anybody on hold earlier, just to get that in Hansard. But look, I just had a quick question on enforceability. Of the recommendation 4.9 was that the law should be amended to provide for enforceable provisions of industry codes. I was just wondering if you could please set out what are some of the specific benefits that might arise from such a legal provision.
Enforceability of particular provisions of codes would, I suppose, provide even higher standards than currently exist in the code. But I probably should otherwise present the committee view, though, that and the Chair's view in particular, that only specific provisions being enforceable and thereby creating a two-tiered system where there would be then non-enforceable provisions is probably not beneficial to the customer, very much because it will create a two-tier process whereby the non-enforceable provisions would likely not be given the same level of interest by subscribers to codes as enforceable provisions would.
Oh, thanks. Is it fair to say that one of the goals that is being aimed at through enforceability is greater certainty and also the greater potential for judicial precedent, for example?
I believe that is one of the aims of the enforceability legislation, yes.
Yeah, and obviously, in a sense, there's a heightened interest in these potential benefits given the increased number of breaches that we've been discussing earlier. So suffice to say that delaying the introduction of elements of the response to the Royal Commission is going to delay consumers being able to access these or benefit from these changes. That those benefits won't arise for 6 months at least.
Well, the code provisions still very much exist in their current form and are being monitored and rectified by the subscribers, so they still exist.
Well, they still exist, but consumers won't benefit from the additional advantages of enforceability.
Well, they're still being enforced by the committee, so there still are benefits and advantages to consumers, even without the enforceability of provisions.
Sure, but you would agree that there are additional benefits from enforceability.
Potentially, it would be a very different regime to that which currently exists.
Okay, so are you calling into question? Are you calling into question the recommendation and whether it should be implemented?
So the chair of this committee contributed to a joint submission to Treasury in August of last year about the implementation of this recommendation, and there were concerns expressed about the possible implications of enforceability of certain provisions of a code, and that it effectively also went to the very heart of industry self-regulation.
Okay, and so what did you suggest?
Well, the suggestion actually was perhaps that the whole code should be enforceable, if nothing else, but that otherwise carve-outs of particular sections would create this kind of two-tiered situation that I referred to before.
Sure. Okay,
Also,
last question. But you'd be recommending that the whole code be enforceable if enforceability is brought in at all, because that would then lead to the advantages of enforceability, but not the disadvantages of a two-tiered system.
Well, potentially, but I think that the view of the committee would be that that would effectively threaten the flexibility and the purpose of a self-regulatory code and its ability to actively create continuous improvement and meet consumer expectations in a timely manner if there was an enforceability regime which would really change the nature of the landscape.
Okay, thanks.
All right, thank you, Dr. Molino. I don't have any further questions from committee members. Therefore, I thank you for appearing before the committee today. The committee secretary will be in touch with you in relation to any matters arising out of today's hearing. You'll be sent a copy of the transcript of your evidence to which you can make corrections of grammar and fact. And we already have the Insurance Council on, so I'm just going to keep going, if that's all right with the Secretariat. I'm getting thumbs up. So we have representatives from the Insurance Council of Australia appearing for today's hearing. For the benefit of Hansard, would you please state your full name and the capacity in which you appear before the committee? Thank you, Ms. Davis. Members of the Insurance Council.
Yeah, sorry. Thank you, Mr. Chair. Robert William Whelan, CEO of the Insurance Council.
Fiona Cameron, Head of Consumer Outcomes Policy, Insurance Council.
And Carl Sullivan, Head of Risk and Operations.
All right, thank you. I remind you that although the committee does not require you to give evidence under oath, the hearings are legal proceedings of the Parliament and warrant the same respect as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as contempt of Parliament. I also remind all members and witnesses they must set their microphone to mute unless given the call to speak. I now invite you to give an opening statement.
Thank you, Mr. Chair. Thank you for the opportunity to give evidence and provide this opening statement to the committee. The Insurance Council of Australia is the representative body of the general insurance industry. It does not represent the life insurance or health insurance sectors. I understand the purpose of today's hearing is to discuss self-regulation, the general insurance industry code of practice, and recent reports of the Independent Code Governance Committee. I'm supported today by Fiona Cameron, who heads the Consumer Outcomes Policy Directorate. This directorate has oversight of the industry's self-regulation. Mr. Carl Sullivan, who heads the Risk and Operations Directorate, is also present. This directorate provides oversight of the industry's catastrophic responses. I will defer to them on areas of specialist knowledge. As a background, insurers provide 41.5 million small businesses household insurance policies to customers each year and pay more than $169.4 million in claims every working day. The code requires subscribers to cooperate with the Insurance Council on industry coordination arrangements for the Insurance Council declared catastrophes. In that context, I'm pleased to say that insurers have made impressive progress in helping customers affected by natural disasters over the recent spring and summer. Insurers have so far received more than 38,000 claims totaling $2.32 billion from bushfires. Almost 2/3 of the 9,086 residential building claims and more than 80% of the 14,033 contents claims have now been closed. This means repairs or rebuilds have been completed, items replaced or payments provided. The bushfires make up just under half of this season's natural disasters, with total claims billed now more than $5.19 billion. Close to half of all disaster claims are now closed, even though hundreds of new claims are being lodged every week. These strong closure rates show insurers have been focusing on helping families and small businesses and working to the principles of the Insurance Council's Code of Practice. At last week's Natural Disasters Royal Commission hearing, AFCA lead ombudsman John Price said AFCA had not detected any systemic issues with the insurance industry. He noted insurance companies had become conciliatory in their approach and more proactive since the 2009 Black Saturday bushfires. I'm pleased now to provide information to this committee on self-regulation and the General Insurance Code of Practice, first introduced in 1994. Self-regulation plays an important role within the broader regulatory landscape. The code is the general insurance industry's self-regulatory commitment to customers. On the whole, the code standards go beyond the minimum requirements of law and drive positive consumer outcomes. Its objectives are high standards of service, better and more informed relations with customers, fair and effective dispute resolution, continuous improvement of the industry through education and training, and to maintain and promote trust and confidence in the industry. The code plays an important role in raising customer service standards and meeting customer expectations. These standards cover the entire customer service relationship, including sales and distribution, renewals and cancellations, making a claim, and complaints handling. The code covers most general insurance products, notably car, home building, home contents, and travel. The Insurance Council owns, develops, and together with member companies, promotes the code. It is a living document that has been periodically reviewed and improved since its inception 25 years ago. The latest review is one of the most extensive in its history. It was conducted by the Insurance Council with independent oversight. This led to the development of the new code, which has been significantly revised and improved. The new code is prefaced by industry-developed principles that understand and shape the way the industry behaves, treats customers, and approaches making decisions. The Independent Code Governance Committee operates as arm's length from the Insurance Council. It monitors and enforces the code, reports on compliance, and has broad scope to consider breaches and investigate industry issues. It provides recommendations on the code and issues industry guidance on how code compliance can be improved. The committee conducts own motion inquiries that can result in recommendations for industry or code improvements. The committee's first own motion inquiry, which looked at claims investigation and outsourced services, is reflected in the new code. You'll be aware that the Code Committee recently released its 2018-19 annual report. The committee acknowledges that the increase in insurance breaches can be viewed as evidence that code subscribers have improved their cultures so they are more open to reporting breaches, are taking their monitoring more seriously, and have more robust and effective breach mechanisms in place. They are learning from the breaches and are putting in measures to prevent reoccurrences. The Insurance Council is pleased ongoing improvements to code governance frameworks will help identify issues and improve consumer outcomes through rectification or compensation measures. The Living Code report was released on Monday. It makes recommendations about how insurers can continue to develop a culture of compliance and breach reporting for demonstrated robust compliance. These reports are educative tools to assist subscribers to continue to improve compliance frameworks. The ICA started its latest code review process before the Hayne Law Commission was announced. We extended the process to ensure we could take those recommendations into account. This was a prudent decision. The new code now empowers the Code Governance Committee to impose sanctions on code subscribers for breaches or significant breaches. It includes a community benefit payment of up to $100,000 for a significant breach. This is a sanction unique to financial services codes. It originated from the Insurance Council's own review. The Insurance Council is also working with Treasury on enforceable code provisions, which was also a Hayne recommendation. The ICA intends to apply for ASIC approval of the code once regulatory framework of enforceable provisions is in place, and ASIC has updated its regulatory guide 183. When the code transition was launched at the start of last year, we expected it would be business as usual. This is no longer the case. Insurers wish to focus on helping those customers most in need, while also having sufficient time to implement the new code. The new code addresses societal issues of vulnerability and provides greater support for those experiencing family violence, customers experiencing vulnerability, including financial distress and hardship, mental health, physical health, age, language barriers, literacy and cultural barriers, and First Nation status and remote location. The internal complaints process is also being streamlined following stakeholder feedback. Recently, the Insurance Council Board decided insurers should direct urgent resources to customers who are facing vulnerabilities during COVID-19. From July 1 or earlier if possible, insurers are fast-tracking, where possible, vulnerability and financial hardship measures intended by the new code. Insurers are also required to have a family violence policy in place by July 1. All remaining code provisions start from July 1, 2021, which is a 6-month extension due to COVID-19. This is in line with the government's extension to Royal Commission legislation, which has been accepted by consumer organisations. In conclusion, self-regulation plays an important role within the broader regulatory landscape. The principal role of the general insurance industry code of practice is to continuously improve customer service standards and customer outcomes, meeting the changing requirements and expectations of the community. The industry continues to demonstrate its commitment to the code. We are now happy to take questions from the committee. Thank you.
Thank you very much for that testimony and opening statement. It gives a good indication about where the council sees matters at the moment and attitude towards reform. But I guess I would go back to the question I asked from the General Insurance Code Governance Commission and some of the issues that were raised out of its report, particularly around the incredible spike related to the number of identified complaints. And just wondering what it is your reflections are that led to such an incredible spike within the sector.
Well, as I mentioned in the opening statement, it's apparent that all the companies, the insurance companies, have taken on a much greater level of compliance awareness with all regulation, but particularly with the code of practice regulation. And I think this demonstrates a much greater emphasis and capacity within those companies to be able to identify, recognise, report on, which is an important contextual issue, is that there's much greater level of self-reporting breaches which they believe need to be identified and rectified. And I think that just demonstrates a greater level of commitment to embracing the code and implementing the code to the betterment of customer outcomes.
Sure, but I mean, why did it take a royal commission to get such a seasonal attitudinal change? Was it because the companies were not focused on customers before, or because they had implemented new processes? And how can we be confident that this is the end of it and that they're actually to scratch now?
Well, this is a process of continuous improvement, Mr. Chair. That is the whole purpose of the Code of Practice, and it always has been. It's about trying to identify ways in which the individual companies can determine areas that they can improve their service standards and service delivery to customers and migrate to that greater level of customer service over time. So it was always about identifying those capabilities to be able to develop better service standards over time. So it is a continuous improvement mechanism or instrument.
Sure, but
So
have you had another year where you've seen more than 100% increases in self-reporting?
Well, there has been a very high level of increase in self-reporting. So awareness is much greater, I guess, of the code and its provisions, and therefore the level of understanding through our organisations has improved, and their training around the code has also improved. And as a consequence, there's been more capacity to be able to identify and therefore report breaches.
Sure, but that wasn't my question. My question was, is there another year where you've had more than 100% increase in self-reporting? I presume the answer is no.
The answer is no.
Okay. So we've obviously seen quite an attitudinal shift within a relatively short period of time, which has led to a huge amount of self-reporting in the circumstances. That'd be fair.
Mm-hmm. Yes, that's fair.
Okay. What steps or what guidance is the Insurance Council now giving to its members around ongoing improvement against the code and against standards that would be consistent with the expectations the public holds of the sector around complaints handling?
Well, there's much higher levels of training and awareness creation within the organisations through structured training programs that are being implemented, most particularly those that relate to the new Code of Practice, which will come into full effect in 2021, but progressively is being implemented now as the training gets implemented within the organisations. So just through dint of increased levels of training and awareness creation within the organisations of the provisions of the code, plus an enhanced capability of the Code Governance Committee and its useful reports that it produces on a quarterly basis around the aspects of the code or breaches of the code which could be further enhanced and improved. Those factors are all now feeding back into the organisations at the very highest level so that appropriate remedial measures are taken within the organisations to remedy those areas of breaches to encourage no further occurrence of them.
And are you satisfied that that proportionate steps are being taken within the sector to fulfil those expectations by 2021?
Well, Mr. Chair, it's something we do monitor, of course, in combination with the consumer organisations who are constantly looking at these issues, plus, of course, the Code Governance Committee, who we spend a large amount of time talking through what are the issues that they're detecting in the breach reporting that they're seeing, the compliance audits that they undertake of the individual code subscribers, so that we do have feedback mechanisms that we're able to feed into our board structures and also into the working committees that we have with the individual companies about how best to deal with these breach issues and to identify mechanisms and ways to ensure that those are remedied and that future occurrences do not occur.
So then for clarity, are there any, shall we say, red flags from the council's perspective around that progress amongst companies?
Well, to the extent that we see any increase in significant breaches, that would be a concern, and we have seen some increases in significant breaches. But again, the fact that they are being identified and reported and then remedied is a positive sign that shows that the industry is all about making sure that they reform their processes to improve their customer service standards on an ongoing basis. And I think that's the areas that we do concentrate our energies on.
So I presume then you would expect the number to drop next year?
Well, it is obviously an objective of ours and the Code Governance Committee that be the case, and also of the entities themselves, the companies themselves, because they are reporting those breaches with a view to remedying them and fixing those issues so that they don't reoccur.
Well,
so
how many of them would be involved, just for clarity then, how many would involve historical complaints, which therefore might be self-reported, which would mean there would be a reduction, versus the number that are over a financial year and therefore they may continue to either rise or stay stagnant?
Mr. Chair, I don't have the information on the longevity of some of these breaches. Some of them will be complex in nature due to, say, systems failures or something along those lines. So I don't have that information. I'm happy to take that on notice if necessary.
Please do. Before I hand over to the Deputy Chair, just because we're trying to make up for lost time, one of the issues we explored with some of the insurance companies of varying degrees last time we had the insurance sector before us was around the measures they're taking in response to COVID-19, where we have, for instance, insurance policies around cars, where people are obviously using their cars less and therefore there wasn't the same risk profile, so therefore they weren't paying the same amount for their, there wasn't the same risk profile, so therefore there wasn't the justification to charge as much for car insurance. There are other issues that we've raised related to health insurance, etc., where people couldn't get elective surgery. What guidance is the Insurance Council giving to its members around products where, because of various restrictions which have been introduced and may now be being relaxed but may re-emerge around either compensation, offsetting or some other alternative measure for insurance policies?
Well, there's been a number of initiatives that the individual companies have undertaken, both in the retail sectors and also in the wholesale sectors as they relate to small to medium enterprises. So there's been some relaxation of premium requirements for the small to medium enterprise businesses so that they've been deferred so to take pressure off the cash flows of those enterprises. There's been support for the service suppliers so that individual invoices are paid in a quicker time to improve the cash flow again of the service suppliers, being small business and what have you. Vacant premises, for example, which would often require additional premiums for the additional risk, have been relaxed, and customers can now, because of their circumstances under COVID, vacate their premises and still maintain their insurance policies. So there's been a range of issues there. There's also been some relaxation for retail customers for, as you say, the motor vehicle insurance rebates have been offered by some insurers to some of their customers and so on. And compensation of various forms has been offered by some companies. So there's been a range of measures that have been implemented, and they are continuing on within the timeframes that have been identified to those customers.
Yeah, but I get some of those are the measures that have been made by some of the companies. I'm asking, has the Insurance Council provided any guidance to its members around what actions it should be taking in response to the COVID-19 pandemic?
Well, in particular, in relation to the Code of Practice, we've, as you would have heard from my opening statement, we have, with our member companies, advanced as quickly as possible those provisions around financial hardship, as specifically they apply to those suffering hardship as a consequence of COVID-19, most particularly around financial hardship. And so those provisions are being worked through with individual companies and expedited as quickly as they possibly can to be sensitive to these sorts of issues if people are facing hardship issues as a consequence of the virus. So those things are being put through, and the Insurance Council is actively working with member companies around these things.
Okay, Deputy Chair.
Thanks, Chair. Mr. Whelan, thanks very much for giving evidence today. We've just heard from Ms Davis about this extraordinary increase in reported breaches. 128% overall, 310% increase in significant breaches. Those breach rates are at record highs. Were you aware of this when the Insurance Council made the decision to defer the implementation of important parts of the new code?
We were aware of the increase in breaches, yes, Deputy Chair. It is not necessarily related, however, to our decision or our request to be able to delay those additional aspects of the code, the new code implementation. The reasons essentially behind the need to have a delay, and it is 6 months delay, to the final implementation of the full code is essentially because of the capacity of insurers to be able to implement and transition to the new code. There is severe constraints on the individual resources of these companies as a consequence of COVID-19. There's also some real resource constraints around training capacities within these companies to be able to get staff into a position that they're aware of and understand their requirements and obligations under the new code, and be fully trained to be able to implement those new provisions. So there are very practical and pragmatic issues that we have to address, which is a consequence of these not normal times that we are operating in. So they are not necessarily related issues.
Well, I can certainly see it from the perspective of your members, but I would have thought many consumers would feel as though the squeeze was being placed on them by the fact that the economy is now clearly in recession, and that the impact of delaying this new code by 6 months could be significant for many people who had claims. We're talking about significant claims that cover 380,000 Australians a year. So that could be a couple of 100,000 more Australians who suffer the consequences of breaches without a sanctions regime in place. Wouldn't you agree?
Well, I'd make just 2 points, Deputy Chair, around that. Firstly, one of the main reasons why there has been such a large increase in the breaches is that those breaches often relate to timetable breaches. That is, failures of the individual subscribers not to meet specific timeframes for informing customers around the status of a claim or a complaint, or providing information to them, documents, etc. And that can be a matter of just days that they miss those particular deadlines by. But that is a breach, and that is reported, and that needs to be remedied. So those are factors which not necessarily cause great consumer harm. They may be inconvenient, but they're not necessarily at a level that would greatly affect a customer's financial circumstances. With the issues that you relate to the urgency around those customers most affected, well, the code does actually require now for those customers, as I mentioned earlier, that are suffering significant financial hardship as a consequence of COVID-19 are expected to be dealt with sympathetically and compassionately under the provisions of the new code as it stands now. So that's expected to be implemented this year under the original timetable. So those
But wouldn't you
aspects
agree with Ms Davis's comment that consumers will benefit when the sanctions regime comes into place?
The sanctions regime has been designed to be able to provide much greater levels of recourse from the Code Governance Committee to enforce code provisions. So we are comfortable with that. We've worked hard with the Code Governance Committee to be able to identify those and implement those. So we agree with that. We think that they're necessary. So they will benefit all providers, all customers of the code.
So it's good for consumers, but it's being delayed. And it's being delayed under the heading of a media release that you put out on the 7th of May saying Insurance Council fast-tracks new code of practice. A little misleading, no?
Well, it fast-tracks the aspects that are most concerning to the community at this point in time, which relate to the vulnerability and financial hardship customers are experiencing as a consequence of these really quite troubling times. And so that's the area that we have fast-tracked and encouraged our subscribers to implement as quickly as they physically can to ensure that we're dealing with these rather unique circumstances that we find ourselves in.
But the sanctions regime will have real teeth, and that's the part which has been delayed. It's not just a communications issue, it's a substantive issue. It strikes me that the industry is delaying potentially the most important reform from the perspective of consumers.
Well, there are still sanctions that are available to the Code Governance Committee, which have been in effect for some time since the 2014 code was introduced. So those sanctions remain, and they are still able to implement those sanctions at their request. So that's something that's already in place. So it doesn't mean there's no sanctions available to the Code Governance Committee. They've just been enhanced for the new code, which is a much more extensive and all-embracing code than the current one is.
Let's talk about subscriber P. We accounted for half the breaches in the last reporting year. Subscriber P apparently had significant improvements in their reporting and governance framework. Have you encouraged other members to learn from that experience?
Well, of course, this is the whole instrument of the self-regulatory tool of the code of practice is about continuous improvement. And that includes not just process improvement or breach reporting improvement, but also cultural improvement. So Living the Code, which is the report just most recently delivered by the Code Governance Committee, goes to the issues around leadership, it goes to the issues around training, it goes to the issues of awareness and culture around putting the customer at the heart of all decision making, and also making sure that compliance is fully understood and fully embraced within the organisation at all the levels. So I think these things are all about continuous improvement of the industry's capacity to deliver better consumer outcomes.
But there's no particular lessons out of subscriber P that you're seeking to encourage other members to adopt?
Well, there's all different companies have all different cultures and different capacities to embrace reforms. But at the end of the day, whatever we can take as a learning from these reports and from these investigations that the Code Governance Committee is undertaking, we will certainly embrace, and we certainly bring those to the attention of other subscribers to the code, so that we do get that continuous improvement outcome.
Last time you were before the committee, we had a conversation about landlords insurance and whether or not you would be discouraging insurers from going after tenants for unpaid rent during this period. You seem to be taking a pretty laissez-faire approach, saying you didn't expect it to happen much, but if a member was to do it, then c'est la vie. We then had various members of yours in front of us, all of whom said, no, we would never do that. Have you rethought your position at all, or do you still think it might be okay in some circumstances for insurers to go after tenants for unpaid rent?
Well, the circumstances are unique, Deputy Chair, so I fully understand that it may have sounded a bit cold-hearted, but that was not the intention. I was simply pointing out that there are circumstances which are not necessarily impacted by COVID and the current circumstances, which are more normal circumstances where an individual may not be able to pay their rent for other circumstances which would normally see the insurer require that payment. So I think that was all I was trying to point out, that this is not a carte blanche position. But certainly under the current circumstances, insurers are not pursuing the tenants for that particular payment. No.
But that's up to insurers. That's not something that you would seek to enforce on members.
I don't have the capacity to enforce that, no. It's simply by attempting to influence them.
I think you're maybe underestimating your degree of moral suasion. I think a statement from you that you didn't expect members would go after tenants for unpaid rent, except perhaps in exceptional circumstances, might well tilt the hand of some of your members. You haven't considered doing something of that kind?
Well, certainly we have those discussions, but it's really the individual companies that are making that decision themselves, and that is what they're doing. They're not pursuing. So they've taken that decision without necessarily my moral persuasion.
There's also been a rise in the number of claims that are withdrawn each year, according to the Code Governance Committee. And there's a suggestion that some of the information provided by insurers is lacking in those circumstances. Are you pressing your members to provide appropriate data in those circumstances?
Yes, it is an area that we are looking at to see how data may be improved to get better understanding of the specifics behind why a claim is withdrawn. There are a multitude of reasons why people do withdraw a claim. The most common one is that when a claim is put forth, that particular claim may be less than the excess that's due on that particular claim if that was to proceed, and people withdraw from the claim as a consequence of it. It just doesn't make economic sense to pursue the claim. In other cases, it's often an issue where a claim is put forward on a policy which actually doesn't cover that particular event, such as if someone has a compulsory third-party policy and they damage their car in a normal accident situation, and they believe that they can claim that accidental damage on their motor vehicle under the CTP policy. That's not the case, so that policy doesn't cover that type of damage. So it's a casualty policy. So there are just misunderstandings in some cases, or simply not economic for the claimant to pursue the claim.
There was a report in the Financial Review a month ago saying that travel insurance complaints reported to AFCA had soared, and that giving the example of a couple, Alexandra Rain and Gabriel Christensen, who were denied a claim for losses relating to a skiing holiday on the basis that that their decision ought to have anticipated the pandemic. That was despite the fact that they paid for the insurance before the World Health Organization declared COVID-19 a pandemic. Have you spoken to some of your members that offer travel insurance about this issue? The question as to whether travellers should have anticipated that COVID-19 related claims would be excluded seems like a loophole that some of your members are trying to drive a truck through.
Well, I can't go to the specifics of that particular claim, but pandemics are a broad exclusion on policies, so that it was, as far as I'm aware, that claim would have been denied on the basis of that particular blanket exclusion. But I can't go into the details of that particular instance, but happy to take anything further on that on notice. Perhaps my colleague Carl could.
I think that's broadly right. In the travel insurance market, around half of the policies operate with a blanket exclusion around pandemic at any time, regardless of a WHO declaration or not. They may term it as infectious diseases or other similar terms. The other 50% of the market work on a known event principle. So at a certain time, they will declare that any policies sold post that date will be subject to a specific exclusion around that known event. So the case you're referring to there, it could be one or the other. At the moment, we're aware of around 1,200 travel insurance complaints with the Ombudsman, and they've got to establish a process to rapidly work their way through those. But we're happy to take some of those questions on notice and come back to you with some detail if necessary.
So when was COVID-19 a known event?
It varies from insurer to insurer, but those who operate on a known event principle, all of them have made their known event declaration in the last week of January. So from around the 19th through to the 30th.
So this is a stage at which the Prime Minister is saying that he's still happy to go along to watch his favourite football team. This is a period in which Donald Trump is just calling it a little virus. And you're saying that Australian mums and dads, when booking overseas travel, should have known that this was a pandemic. That's an extraordinary position to be holding.
They should certainly be made aware that the travel insurance policy that they're purchasing now has a known event restriction around it.
Dr. Lee, I'm afraid, Deputy Chair, I'm afraid we're sort of running out of time, so I'll leave this as the final question. But I mean, that's an important point, which is accepting the point that the Deputy Chair has raised. Does that mean that everybody who was sold a product was made aware of that at that time?
Well, I think that's a matter that will be explored through the complaints process as one of the critical elements to determine is the denial of the claim legitimate, and it's one of the things that AFCA looks at very closely.
Dr. Lee, did you just have any follow-up on that? Apologies, I inserted myself.
No, that's perfectly appropriate, Chair. So there are circumstances that you're saying then that travel insurance may have been sold. There was no statement that COVID-19 was a known event, but nonetheless, despite the fact that many governments were denying it, Australian travellers should have known it?
The disclosure regime should operate in a way that when somebody is purchasing a product, they're made aware of the product's terms and conditions. That would include a known event exclusion if you were purchasing once that known event exclusion had been enacted. And of course, there's a cooling off period at that point.
Yeah, but it's one thing to say known event in broad terms. It's another thing to name COVID-19.
Well, most of the known event exclusions that were initiated do name COVID-19 or similar diseases.
But not all.
I'm happy to come back to you, questions on notice of that and give you a list of those known event exclusions.
That'd be great. I'm aware that, as the Chair says, there's other members who want to ask questions, but if I could get from you a list of known event exclusions by the date on which they were put into effect, the policy name, and specifically whether they named COVID-19 or whether they expected the traveller to just figure it out for themselves.
Mm-hmm.
Thank you, Deputy Chair. And just a reminder, that's one of the reasons why I've requested Covermore to come and present today, because obviously this is particularly relevant to them. Dr. Ali and Dr. Molino, do either of you have questions? Yes, Dr. Ali, you have a question. Very enthusiastically.
I do, thank you. I just wanted to clarify on that line of questioning around the travel insurance, if I may. Does the Code of Practice include an obligation for your members to inform people of a known event once they become aware of a new known event? You mentioned that your members would have known that there was let's not use the word pandemic, but a known event by the end of January. Were they obliged then to let people know who were taking out or had taken out travel insurance with an intent to travel that there was a known event that they would be exempt from?
Happy to take that. So if they had purchased the policy before the known event declaration by that insurance company, then they would not be impacted by any subsequent declaration of it being a known event. So they would essentially not be subject to that exclusion.
So if somebody took out travel insurance in February, or let's say early February, the pandemic hadn't been declared yet, but the insurance company would have noted it as a known event, which would then exclude travel insurance. Are they obliged to let customers know that there is a known event and exclusions apply under the code?
So at the time of purchasing, the disclosure regime means that they must be given the opportunity to understand the policy, and they're either sent the documents or walk away with the documents. They have a cooling off period in which they can review the terms and conditions, and it would be expected that a known event declaration that had been made and that was attached to that policy at the time of purchase would be available to be understood by the client at that time. And under that cooling off period, they then have the opportunity, of course, to cancel the policy and seek out something that might suit their circumstances a little better.
So an insurer, just to be clear, an insurer, if somebody had taken out a policy, an insurer would have said to them, look, we are aware that there is a known event and your travel insurance will not apply because of this particular known event. You now have the option to cancel your insurance policy because we are aware of this known event and we have disclosed to you that there is a known event and exclusions will apply.
Yes, well, it'll only apply to certain aspects of the travel, of course, but the most of the policies are either purchased through an agent or online. If you're purchasing online, and I invite everyone to have a look at some of those online websites, it's made very, very clear right at the top of those websites when there is a known event exclusion that might be impacting the sale of those policies or how those policies are reflected. For insurers who don't rely on known event exclusions, it is in the product disclosure statement that the person is supplied at the time of purchasing.
And would you be able to take on notice and perhaps let us know on what date that exclusion would have appeared on websites?
Yes.
Thank you. You mentioned that you review your code of practice. How often do you review it, the code of practice?
It's reviewed every 3 years.
And what are the terms of reference for the review?
They are undertaken with broad consultation across a wide variety of stakeholders before the terms of reference are defined. Of course, the stakeholders will include the Code Governance Committee, the various consumer groups, member companies themselves, ASIC, and other interested parties. AFCA is another one, of course. So it's a very wide-ranging consultation process that develops A, the terms of reference, and then B, the process of actually defining the issues that the code will, under its review, address in the reviewed code.
So they're not standing terms of reference. They are subject to change depending on those consultations. Am I correct?
That's right.
Thank you.
Yes.
You mentioned the family violence in the new code of practice. What prompted that? What prompted the inclusion?
Could I pass perhaps to my subject matter expert on this who undertook the entire process of reviewing the code?
Yeah, thank you. Family violence was an issue that was brought to our attention through our Consumer Liaison Forum. That's our key engagement mechanism with our consumer representatives. So for a number of years, we've been really looking at issues around family violence, and the code was a prime mechanism by which we could raise the status of family violence. So we've included in the new code a requirement that the industry must have a family violence policy in place on its website. We haven't changed the timeframe for implementation of that particular obligation in the code, given the obvious issues that we've been hearing, arising out of the COVID-19 situation. So we continue to work on that issue.
What are the expectations from you of including family violence policies?
Yeah, look, so the obligation in the code itself is quite high level, and it's supported by a guidance document which we've produced, which sits behind the code. So there's some best practice guidance which the industry can look at as it develops its policies. And these kind of things that are highlighted are all around treating the claim sensitively, ensuring that referrals are made to appropriate organisations. But most crucially, this guidance was developed through workshops with relevant stakeholders in the field as well.
Will you have training and resources available as well for the implementation of that family violence policy?
We have supported the development of some training around vulnerability. We engaged with a specialist organisation to develop training around vulnerability, and that takes into account family violence as well. We continue to work with our members on issues of implementation. So we'll continue to look at any issues that arise through the next few months as the policy, is finalised.
Thank you, and can I commend you on that initiative of tackling family violence? Thank you. Thank you, Chair.
All right, just quickly, Dr. Molino, do you have any questions?
No, I'm good, thanks.
All right, good. Okay. Thank you for appearing before the committee today. The committee secretary will be in touch with you in relation to any matters arising out of today's hearings. You'll be sent a copy of the transcript of your evidence, to which you will be correction of grammar and fact. I now suspend proceedings, because we're on time, for 9 minutes, and we shall resume at 3 p.m. with our dear friends from Genworth.